This is a short video to illustrate the difference between range bars and RENKO bars. RENKO bars are at the top of the screen and the range bars are at the bottom. Both of these are the same equity, and it's the ES on the same day. Each bar from top to bottom is a half a point with the RENKO as well as the range. So everything is close to equal on these two equities as you can make it. Now if I scroll the global crosshairs back and forth here, you can see that the RENKO consistently is ahead of the range bars. So what does that mean? It means that the RENKO bars are more efficient than the range bars. It takes more range bars to get to the same point in time than the RENKO bars, because neither range nor RENKO is plotted on time, just on price. So that means that the range bars are more random, less efficient. Randomness equates to choppiness. So we all know that you don't want to trade when an equity is choppy, or even relatively so. So relatively speaking, range bars are more choppy than RENKO bars, which means that they are more random and less trendy. So obviously an equity is easier to trade if it's more trendy than it is random. So relatively speaking, RENKO bars certainly appear to be easier to trade and more trendy than the random range bars. Here I've put the same two charts side by side vertically, so you can see what the R square looks like when it's applied equally to both of them. 10 period R square. Now the brown line moving horizontally across the chart is at 0.4 area on the R square, and that's the trigger line. That indicates when it's above that there's a trend. Now you can see on the left the range bars, at what point in time R square went above its trigger line, and you can see at what point in time the R square went above on the RENKO chart. Now I've got the crosshairs on the RENKO chart right at the bottom of 3 bars there. As soon as the RENKO bars move below those 3 bars, the R square indicator is indicating a trend. And you can see the R square on the RENKO bar stays above its trigger line and goes below it right at the end of the trend right here. Whereas on the range bars, you can see the R square goes above the trigger line, down below, up above again, down below, up above. It's not nearly as smooth in that same period of time. So I think this is pretty clear evidence that there is less random movement on RENKO bars than you find with range bars. Therefore, RENKO bars should be easier to trade.